Hey, my friend, welcome to this edition of the Top Dog Trading video for YouTube and, well, anywhere else this might occur. So today we're going to talk about real-life trading and what expectations you should have, because it's very, very important, muy importante, that you have realistic expectations. Otherwise, well, you're doomed to be losing in your trading. I want you to be a profitable trader, so the first thing we have to do is, step one, set up realistic expectations. And one of the expectations that I find that people are unrealistic about is they will think that they should be able to find some way to catch every swing high or low. So they'll say, oh, how would I have known to go short here? How would I have known to go long there? How would I have known to go short there? How would I have known to go long there? How would I have known to go short here? Okay, so that is ridiculous. You will never know how to find in advance every move in the market, every swing high and low. Doesn't happen. Nobody can do it. I can't do it. You can't do it. Warren Buffett can't do it. Well, God can do it, but God's not telling anyone how to do it. So anyway, if you think you can do that, then I want you to say hi to the Easter Bunny and the Tooth Fairy and Santa Claus for me, because that's the planet you live on. All right? They all live on that planet. So say hi to them for me. All right. All teasing aside, what real trading comes down to in real life is about finding probability situations, which, by the way, is not even close to finding every single move in the market. And one of the side effects of this almost disease, which is a dis-ease, where people become uncomfortable with trading, is fear of missing out. They think if the market makes a big move and they didn't catch it, then, dang, I should have been able to catch that. Then they'll go back and they'll try to review the situation and try to figure out, okay, how could I have known that this was the low and that I should have bought that puppy? And the trouble with that is that we can become very good at figuring out ways, using our imagination to note some patterns there and say, hey, okay, this is how I could have known, except for one problem. Yeah, that might have been the situation on that particular move, but that has nothing to do with every move in the future. So in trading, there are no certainties. That's one of the problems. That's one of the psychological challenges in trading, is that human beings, myself included, I love certainty, and most of us do. We are actually wired for certainty, for security. It's part of our survival instinct. Nothing wrong with that. Actually, it's a good thing. But when it comes to trading, and again, this is what makes trading somewhat unnatural and therefore difficult, is that there is no certainty. There are only probabilities. And so even when we do have a high probability scenario, they don't all work out. Well, otherwise, of course, by definition, we would have a certainty. So that's why risk management and money management come into play, is so that during those times when the probability doesn't work out, let's say you've got a 60% probability, so over a large sample of data, yeah, that's going to work out for you. But 40% of the time it's not. So therefore, you've got to have impeccable risk management and impeccable risk management, money management, because those two things, well, those are really what real traders live and die by. That's what it's about. Amateurs tend to look for the magic indicator or this or the magic price pattern or that or some geometry pattern, and those things can be fine. Actually, they are good, but they're not magical. They're mathematical, but they're not magical. And so the fact that they're mathematical equations is exactly what can allow them to help us have a probability scenario, as long as in our mind we recognize that that's all it is. And it's going to occur over a large sample of data, not every swing high and every swing low. And to bring that even into more reality, you've got to understand that all kinds of stuff happens in the market. So even if you recognize a pattern that maybe works 6, 7, 8 times out of 10 based on history. All right, a lot of people are into back testing. Okay, well, that's great, but hindsight's 20/20, and that's still what that is. Back testing is still hindsight. So when I come into the future, Okay, you get that same pattern, whether it's a price pattern, an indicator pattern, whatever, Fibonacci levels, etc. What's going to happen this time? In other words, what the past does not tell me is, well, is there going to be gossip that comes across the wires at the time I take that pattern? Is there going to be some news or rumors? Doesn't even have to be real news, right? Could be fake news. And I mean, seriously, it could just be some rumor that comes across the wires that isn't even true, but it will affect the market at the moment you take the trade. And that stuff, there's no indicator. There's no rumor indicator that's going to tell you that the rumor is going to happen in 5 minutes from now. There's no gossip indicator. And now there's news, of course. And so we definitely want to look at the pre-scheduled news. But even with that, how's the market going to respond to that news? Number one, you don't know what the news is going to actually be. And sometimes, ironically, the market will move up on bad news. And it'll move down when the news is good. It's just not good enough. Or it's really good, but expectations were really high. And so you look at the expectations numbers, and sometimes those are met or even exceeded, and the market still moves down. So all that stuff, it's very unpredictable. So can put the odds on your side, but again, that's why you must absolutely master money management and risk management. Here's another little tip for you, and that is that, well, let's look at this. Okay, so we've looked at these highs and lows here. So let me take these off, and let's just look at one and finish up our video with this one. So I got a lot of people who say, oh, indicators are all lagging, and price action is the only thing that is predictive. Okay. Everything's lagging. Everything is lagging. So, for example, if we take the hard rate edge of the screen right here, all right, we've got a very nice, that's just a common engulfing pattern, and, very obvious one. A lot of people notice that, see that, and therefore say, okay, that looks like a very high probability cycle high or swing high, so I'm going to short that. Alrighty, so very cool. So you short it, and the market goes down a smidge, and then it goes up and takes that high out. No bueno. No bueno. So why didn't that candlestick pattern work? Who the heck knows? All right? Who the heck knows? Candlestick patterns are short-term patterns. Here's the point. Candlestick patterns are short-term patterns. That's number one. They do not determine trend, which is by definition always long-term. Number two, they don't always work. Even Steve Nissen, who brought them to the West, and I love Steve, and I do use candlesticks, so I like candlesticks. I'm not dissing them at all. I like them very much. But they're only one piece of the puzzle. In other words, they're one part of the business plan. In isolation, and even Steve Nissen talks about this, they cannot be used in isolation. They must be taken in the context of the entire chart. And I agree with that 1,000,000,000%. So that is very important. That's the reality of trading. So how do we trade? The ultimate answer, obviously, I'm not going to be able to give you, all the answers here, so that, a 10-minute video where you can go work for Goldman Sachs and become a master trader, a little unrealistic. But it all comes down to this. It all comes down to the supply and demand, not only supply and demand in the sense of the bids and the asks and what the sentiment is, because bids and asks, sentiment, supply demand, potential supply and demand, those are things that are just like talk, right? And we all know talk is cheap. Actions speak louder than words. And the same is true in trading. So what are actions in trading? Actions are actual buying and selling, the commitment of money. At the moment, you're taking the trade, not 10 years ago or 20 years ago, even 3 weeks ago from backtesting. So the way real trading works is we look at the moment we're taking the trade, what is the pressure of buying and selling? And price action is part of that. Volume is part of that. Mathematical functions such as indicators, formulas like that, they can be part of that as long as you really understand what they're measuring. And look to use ones that are measuring the balance of power, as it's sometimes called. At that time, realizing that that can change in a minute. And that's where, okay, we take our trade based on that. There's an imbalance here of actual commitment of money, because when people send their money out into the world, they're serious. People are very serious about their money. The bids and the asks, those can be removed at any time. But once their money is gone, that means they've really made a commitment. Then, understand, things still can change, see? Because it drives you crazy because there's no certainty, but that's the world of trading. That's the real world. And you've got to learn to deal with that. So you put your stops in, your trailing stops. Of course, you position size correctly and all of that sort of stuff. So that then what happens, and you're good with it because you know, based on your testing over a large sample of data, you're going to be good. You're going to be golden. And use money management so that you can withstand the drawdowns as long as your system is tested for a long-term profitability. So that's it for today. If you like this video, if you felt it was valuable, if it helped to bring some reality to trading, or you think someone else needs to learn some of these realities, please go ahead and share the video. That's one of the best things that you can do, of course, is pay things forward. Also, click the like button, leave a comment. I love your comments. They really, really encourage me to create more free tutorials for you. And finally, I'm giving away one of my trading courses. And this is a great trading course. It's an actual course of 5 short videos. And in this course, it's not just theory, but I'm actually going to give you one of my favorite trade strategies in there. So I'm giving you something very, very practical. You can go and will hopefully make money. Trade it on a demo account or simulator, obviously, first. It's called the rubber band trade. And this course will give you the rubber band trade, entries, exits, stops, all that stuff, all the details, very specific, absolutely free. And I'm going to give that as my gift to you. Just click on the link in the top right-hand corner of this video, and I will get that over to you immediately.